Hello and welcome to another update video about VeChain. VeChain has reached that ideal target level for this C wave. We want to take a look at what the ideal targets are in this still unfolding diagonal pattern. So there have been some changes, well, not really changes, but developments. We should rather call it developments. What we still have here is this diagonal pattern, which is unfolding in this region and started to develop in June. Okay, so we have our movement here to the upside, basically a 5-wave pattern to the upside that is unfolding, still unfolding, potentially unfolding. That's at least currently the primary scenario. Only if we get the 5 waves as shown here, 1, 2, 3, 4, 5, we can be more optimistic about VeChain's, let's say, future medium term, because we need to see those 5 waves as first confirmation that the price has really bottomed in the bear market. This is not certainty and only the first confirmation. I'm carefully leaning to the idea, but VeChain hasn't really done much to prove it. Okay, so I'm very open here to the idea of another bear market low still. That will eventually be proven after all 5 waves are completed. I mean, first of all, VeChain needs to complete the 5 waves to have that sort of additional confidence that a bear market low could have been established. Again, at the moment, this is the primary scenario, okay? Because even in a bearish as well as in a bullish scenario, this diagonal pattern is for me the most probable scenario right now. And so far, it's been adhering very well to the parameters, so I don't see any reason to change my opinion right now, because we had a wave 1, a wave 2, now the wave 3. Yeah, here we had a small, let's say, entry point, pullback zone, you know, trend reversal area. It was touched several times, 3 times, okay? So there was a bit of time to add positions for anybody who wanted to get into a dip. Well, not get into a dip, to buy in a dip, buy the dip. So there was a bit of time here, but it was a very shallow retracement, which is, to be honest, typical for a B wave in a still unfolding third wave. Now, then I highlighted to you, yeah, the third wave still needs to push a little higher. Yeah, so this, let me just switch that off. This top here was not high enough for a third. Some people might have put a third wave here, yeah, because it's, okay, 1, 2, 3. But it's not about that. You know, you need to use the Fibonacci tool to get to the most accurate, well, it's valid, but it's not like, you know, valid. So it's all about probabilities. We want to rule out the unlikely wave counts. So for me, a third wave, even in a diagonal, and especially in crypto, needs to reach at least the 1.236, better, the 1.38 extension. So that's the ideal target. Can always go a bit higher, but that's the ideal one. And we talk here about 2.8 cents. So that level that I highlighted as next target has now been reached. In addition, I pointed out that green trend line, and I think we talked about in the last video, I'm not entirely sure, but one common target for the C wave is always the 100% extension level of the A wave, which means we take the length of the A wave, go to the low of the B wave, and then the 100% extension is a very common target, and that is at 3 cents, and that level was exactly reached. Now, it can always extend higher. I have no evidence that the wave 3 has topped. Yeah, if you ask me, I mean, it could easily extend a little higher, possibly even to reach the top of that trend channel. And then we can look forward to a 4th wave and potentially a 5th wave. At the moment, I have very clearly only 3 waves up. I need 5. So now the question is, can the 3rd wave still extend? I think it can, especially as long as we're holding above the last swing low. So I would use, but it's now obviously reached the area where the risk is increasing for a pullback. So we had here a situation where we said, okay, probably top is in. Let's add the support area to the chart. So, and now we have reached again a level where I'm saying, okay, it makes sense to make another video. We've now reached a level where a top could be in. Surely it can always extend higher. It's all about reward and risk. So if the top is in here, I would like to see a break now below 2.51 cents to confirm that. And then if I see that, I will add a support area to the chart. At the moment, support for a 4th wave would be down to 1.9 cents. That would be quite low, quite deep. We've got 2.1 cents and 1.9. So therefore, ideally, the 3rd wave extends a little higher. And and then we can also lift the support area up a little bit, yeah? So I'm just thinking that fourth wave would potentially be quite low. I'd like it to, I mean, ideally it reaches the top of that parallel trend channel. Okay, if not, then we have something like an ascending wedge, which might be forming here, which is also acceptable, absolutely, for such a diagonal pattern. Essentially, I need to have some evidence that the top is in place. At the moment, I haven't got that. But the risk has increased because we've reached these Fibonacci targets and we've reached this descending trend line. Yeah, not much more to add, so I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.